Hello, this is Solomon Davis, Right Side Trader. Today is August 2nd, 2024, and this is my weekly market review, where I'm reviewing the S&P 500, that's SPY, on a quarterly chart, monthly chart, weekly chart, and a daily chart. This is all for educational purposes only, because as we all know, trading is risky. You can lose money at trading, so please check with your financial advisor, please check with your significant other, and make sure trading is something that is suitable for you. All right, let's jump over here to these charts and see what we see. I thought maybe we had hit our bottom, but I don't think so quite yet after today. We ended up gapping down, and that's pretty much like a pro gap. But as I had told people, the market does give you warnings, and let's zoom on down here to this quarterly chart, get down to these lower time frames where I can show you where that warning was at and all. All right, on this quarterly chart, we are red. We are back below our yearly R2. But we're still kind of bullish, so I'm okay. The thing is, I know I sell my calls. I don't buy the puts. I say I should, but I don't do it. But I just kind of like watch my stuff, and I get out if I have to get out, and I'll sell a put further down to collect a little bit of money, or and get where I'm roll your boat on the puts. That's what we do. All right, no trade recommendation there, but that's what we do. No trade recommendation. But let's go ahead and go down to the monthly chart and see what we see there. On the monthly chart, we can see that we are still above the 10 moving average, so technically we are still bullish, but here's that first warning sign. We are on the monthly chart. This is the first couple of days of the month. Yes, but we are forming a bearish engulfing at this time and all. So that's a kind of like a warning sign that this market can actually be trying to turn over. If you want to look at it also maybe as an evening star, but the evening star this kind of would be actually a little bit lower, but it's okay. The thing is, it's looking pretty bearish right now. We came down to our pivot, to our quarterly pivot right here and all, and bounced and all today. But we got to wait for this. This is a monthly candle. There's a lot of days left in this candle. The thing that we're going to be looking for is this thing going to get a little bit closer to this 10 before it actually reverses down. So that means it can come really close down here to a support 1 level, or it might just come down here and kiss this 10 and bounce. So that's what we'll be looking at and looking for and all on this picture. But let's go ahead and go down to the weekly chart and see what we see there on the weekly chart. As you can see, we do have, I'm gonna do it like that. There we go. On the weekly chart, 1, 2, 3 weeks ago, we did have the warning sign. We had that bearish engulfing at the right location at the top of the market and we did get our follow through, our confirmation candle, and now we're getting that follow through. But this week we came down to a support 1 level and bounced a little bit for the end of the month because it was just a couple of days here this week, before our next monthly. These are monthly pivots for our next monthly pivots actually really start. We're going to be opening up below pivot, actually probably below a support 1 level. So it's easily to see that we may come down here to at least a support 2 level before we get a reversal if you're playing just off of the pivots and all. And the question is, will we actually break a support 3 level and come back down to a 500 level? That's the thing that the longer big short guys are going to be maybe trying to push this thing down. But it's going to have to break this little demand level here where it went up, but then it'll be getting it back down here into this other area where this market shot up out of. So we got to kind of like wait and see. There's plenty of room for this thing to move to the downside with your 50 moving average. This is your 50 and your 200 down here, this far below. So again, be mindful of your trades, be mindful of your strategies, and play accordingly. All right. Let's go down to the daily noise and see what's happening here on this daily noise. This was last week when I was thinking maybe we hit our low. And then if you was drawing trend lines and all, you like drawing those trend lines, you notice I don't like doing that stuff. You did get a breakout above there, and you might have wanted to get into the market at this point right here and all, but it should have stopped you out the next day, because the next day it actually came down below this previous day right here. It got back into this area right here, and then it gapped below. If you had a stop here, this is why a lot of people don't like using stops. I use stops, but I rather use alerts. If I had a stop in place, it would have gapped down below my stop. If I had an alert, my alert would have went off and all, and I just had to go in there and take a look and decide what I want to do at that time. It doesn't, in my case, based on my trading plans and my trading strategy, a lot of times putting a stop in place, I run into the same problems that a lot of traders run into using stops. It ends up doing this. gapping below your stop, gapping below your stop, and that's because they see that stuff out there. So it's better to just, okay, this day here, at the end of the day, you saw a bearish looking pattern, just go ahead and get out of that trade. Sell a put somewhere down way below the market, and all if you want to make a couple extra dollars, because this is like this is almost $15 at gap down. So that's 1,500 shares. That's $1,500 that you actually ended up losing on that trade. Based on your trading plan and your trading strategy. But that's it. That's all I really want to share at this time. This is Solomon, Right Side Trader. Hope you guys had a great week. Hope you guys have a great weekend, and I'll talk to you next week. Have a good one. Bye.